I'd like to start this video off by saying I am not a financial advisor. Should you choose to invest in Bitcoin or any other asset, do your own research or seek the advice of an actual financial advisor, preferably one that knows a thing or two about crypto. Now, seeing as we have been trading sideways recently, we surged a little bit after the dump, but now we're basically just trading sideways. People are getting worried that the bull trend might end up coming to an end. This correction that we had can be much steeper and not invalidate the current bull trend that we are in. This is the weekly MACD, first off. As you all know, we had a cross bullish on the weekly MACD, just like back here at towards the beginning of 2019. As you can see, that dip caused the MACD to start to dive downward some. Not downward, but it lessened its climb. I'm terrible at explaining this. It's starting to slope over. Now, it's done that a couple times here. You can see right here it started to slope over. Right here it started to slope over. I just drew a random line for no fucking reason. Until this actually has a cross, there's really nothing to worry about as far as the MACD goes now, because first off, let's go back some. Right here to the bull run of 2017 there. As you can see, the MACD almost crossed right here and almost crossed right here. The signal line and the MACD came so close to crossing, but they didn't actually do it. Bull trends do have corrections, and some of them can be steeper than others. But the overall trend is still bullish. Personally, if we go down, I'd say that we could go as far as the 200 daily moving average. We could probably bounce before then. We could probably bounce. We might even be able to wick below the 200 daily moving average, and still, the candle body bounces off of it. Now, let's go over to the chart. Now on this chart, the price chart is what I meant to say. Let's go over to the price chart. Now, as you can see, we're still on the weekly, and here's our correction that we are having. Actually, this is starting to put in a bit of a doji on the weekly, so that could signal that this may be reversing back to the upside. Now, that remains to be seen. Now, I do want to point out something. During the last, let's just look at the last mini bull run to 14K. We had a correction right about here. Do we have the ruler up? Okay. And that correction was roughly 18% right there. You see that? 18%. Now let's measure the current one that we're on. It's only 12% from top of the from wick to wick. It's only like 12%. So we can go. Bitcoin has a tendency to have steep corrections. We can go further back, and I'll show you some even steeper ones. Let's go to the run of and let's go to this run of 2017 here. Now let's look at this one. Let's see where this one takes us. This correction here was 41%. Okay, let's check this one right here. I was kind of off on that one. It's showing about 20, we'll say it's about 29%. I know, mobile can be a bit of a pain in the ass. TradingView mobile is a pain in the ass to work with, but this is just to get my point across. 3 corrections we've had here that we've measured. This one was 38%, 37%. The one that we are in is nothing compared to the previous corrections that we've had in the 2017 bull run, or even the bull run of 2019. So, even if the correction that we are in, let's go back over here. Let's take a measurement. Actually, let's go to the daily. Okay. We'll measure the correction if we manage to make it down to the 200 daily moving average. That would be roughly a 15% drop from the previous top here down to the 200 daily moving average. So we still have some room that we can drop. Don't change your tone as soon as you see a drop. Don't just suddenly become bearish as soon as you see a drop. Just because we're dropping does not mean it's going to end the bull trend that we are in. Yes, this is a steeper correction than the previous corrections have been in, but you also got to keep in mind that the trend that we were putting in was a rising wedge. We were bound to break down out of it eventually, and that is a bearish pattern. So yes, a downwards break was bound to happen, but that doesn't mean the bull trend was over. It's going to be ending. It just means that we're just going to have a steeper correction, and we could actually bounce from right here. We could go up from here, or we could end up going down as far as probably the 200 daily moving average, and possibly wicking below it all the way down to this support area here, roughly at 8600. This one right here. We could even wick down to 8500 and end up filling the previous futures gap that was down in this area. I think there was one at 8500, and the futures gaps tend to be filled. And so a wick down to that and a candle body sitting on the 200 daily moving average, I could see that happening. I could see it happening on a weekly, and maybe even on the daily. Could probably work down there. Maybe on the 4 hour, you might get a couple closes underneath the 200 daily moving average on the 4 hour, but on the daily and on the weekly, I don't see it happening. I see us probably going, the furthest we go, we could probably go down as the 200 daily moving average, and we are highly likely to bounce from there. But there's still a chance that we can bounce from where we are currently at now. So there's no reason to suspect that the bull trend is over. It could be a steep correction at most. Until you actually have complete confirmation that this has turned into a bearish trend, it's not. It's as simple as that. It's a bullish trend until it actually turns into a bearish trend. Now, I want to remind you guys that the EMAs on here are still bullishly aligned. The 20, the 50, and the 200-day EMAs are bullishly aligned. We've had plenty of golden crosses of both the EMAs and the simple moving averages on here. So, there was people talking about the fact that the 200 daily moving average is still sloping downwards. I got some news for you. It's going to take some time before that 200 daily moving average starts sloping upwards, because it's an average of the past 200 days. It's got averages from these drops here, from this bleed out here. It's got all these lower prices added into its average, and it's only recently having higher prices added into the average. So of course it's going to be sloping downward. You gotta give it some time before it actually starts moving upward, because it is in fact a lagging indicator. The 200 exponential, however, as you can see, has already started to slope upward, because it takes the most recent price action. The most recent price action affects it more than earlier price action. So yes, that's why the 200 exponential moving average is actually already sloping up. Okay, so even I'm gonna give you an example. Let's say our some of our exponential moving averages start crossing bearish. That's not something that's exactly new on a bull run, in a bull market. We've had, during the 2017 run, we've had exponential moving averages cross bearish and then go back bullish. We've had them happen here too, and they cross back bullish. Some of these corrections, they could be pretty steep, and it can cause that, but it's not necessarily going to invalidate the bull market, the bull trend. It happens. It's a correction. Some corrections can be steeper than others, and in this case, this one may get a bit steeper than the previous ones that we've had. People need to take profits, and that's basically it. Once they finish taking their profits, once people start buying into this again, it'll start pushing the price up, and it'll start pushing the price back upwards. Hell, we may even trade sideways for a little bit. We don't even have to go up or down. We could just trade sideways for a little bit, and we could trade sideways all the way into the halving, for all you know. But my original prediction of us getting a run up just before the halving up to 12 to 15k, that still stands. And we could go all the way back down to the 200 daily moving average and then run up to that. It's still within a... I don't even know how to fucking say it. It's still a reasonable prediction. Because the hype behind the halving will likely... It has a high chance, actually, of pushing the price upward. And then, of course, like I said before, people who are new to the space, they don't really know too much about this. And a lot of people, they see price pumping of an asset, they just jump in and buy. That FOMO kicks in, and they just keep buying and buying and buying. And they automatically, and a lot of them are probably have the tendency to think that the halving has an immediate effect on Bitcoin's price, and they're expecting it to moonshot from there. And in reality, it's not going to moonshot for another 1.5 to 2 years. And these people don't know that, so they'll end up closing out their positions when they see it not mooning immediately. And of course, you know, the more experienced traders will likely be taking profits at this point because they could probably foresee this happening, a crash, just like 2016. Let's go back to the 2016 block halving. That was, I forget exactly when that was. Hold on. Right here, 2016 block halving. I don't think that's the exact date, but as you can see right here, the price did in fact go downhill. How much? How much did it go down for around the halving? It went down. The price went down roughly 40% around the halving. So keep that in mind. Just when the halving happens, expect a bit of a drop. That's what I'm saying. We can expect a run up. We can expect a run up to the halving, and then we can expect a drop after the halving, and then the main run can begin. And this right here could be a good trading opportunity if you time it right. Just watch the price action, look for certain patterns, watch your indicators, and just be ready. Because you could be pretty profitable in this general area. Okay, so where are we going from here? Are we going to go crashing down to the 200 daily moving average, or are we going to break out? Well, the two things that pop out are the fact that there's a head and shoulders here. I mean, it may be a bit lopsided, but head and shoulders is still a head and shoulders. And the fact that there is a descending, broadening wedge here. Which one is going to play out? Which one do I think is going to play out? I was kind of half and half on it, but now I'm starting to think it's going to be the more bullish version of this that plays out. Reason for that is the fact that we have been holding this line for a couple days now. The support has not broken. Actually, we are currently taking out this resistance here. And there's a couple other reasons, but basically it's because we're holding the line. And if we can continue to hold this line into the week, I can definitely see us seeing some upside and potentially going to the top of this descending broadening wedge and maybe breaking the top of it. Now, we're going to go to the MACD on the daily. I gotta show you guys something here. As you can see, the MACD on the daily had in fact crossed bearish. But if you take a close look, you can see the MACD is kind of starting to converge bullish with the signal line. I know my drawing fucking sucks. It always does. I'm no fucking artist, but yeah, it gets my point across. These two are converging, and they will eventually cross bullish again here sometime soon, as long as we keep the current trend. And if we pump throughout the weekend, then yeah, we are likely to see some upside. Now, if we pump on the weekend, we're likely to come back down and likely, not 100%, but we are likely to drop back down and fill the futures gap that we may leave on the weekend. But that remains to be seen. Actually, I don't even know where the fucking futures gap is. I'll have to go check that out real quick. But yeah, the MACD is in fact converging bullish on the daily. And of course, as you all know, there is in fact I said fact 3 times in this sentence now, and the fact that we are oversold on a stochastic RSI. Now, if we look at the regular RSI, we have clearly broken that uptrend that was going on for a while. That it was just bouncing and climbing, but we eventually broke it, and now we are down between 50 and 55, and yeah, we have plenty of room to run now on the RSI. We have had our reset that we needed so desperately when we were back in this area, so I can see us easily push up from here like we are actually currently doing. I just caught that just as I got out of the RSI there. We are up to 9.8k. We're pushing up towards 9.9k. We are making our way up towards the resistance right now. But we'll just have to keep an eye on this and see what happens. Can we make it to 10k? Can we break out of this descending falling wedge? Well, that remains to be seen. But this daily candle does seem to have some bullish momentum behind it, because we clearly broke the 9.7k area within the past half hour or so. So this is definitely something to keep an eye on, and this adds to my bullishness of this current trend. And I've drawn so many fucking lines on here that I've almost completely scribbled out the candles. You can barely see them now through my yellow lines. I don't know why I keep doing that, but yeah, I don't know. I don't think there's much news to go over, but yeah, with this, just like I said, you're just gonna have to keep an eye on this. Me personally, I think there's more of a bullish case here than there is a bearish case. The head and shoulders, I mean, it could play out, but I think this descending broadening wedge is going to play out. I think this descending broadening wedge has a higher chance of playing out. But like I said, don't ever base your trades based on what some guy on YouTube says. Always do your own technical analysis. The only reason it is good to watch these technical analysis videos so you can see where the majority of traders are thinking that the market is going to go. You get an idea of what the market sentiment is and all that other shit. And like I said in a previous video, you can possibly find something that you may have missed in your own technical analysis by watching other people do their technical analysis on YouTube. So it is always good to watch these videos, but don't base your trades solely on YouTube. Base your trades on what you find through your own research, through your own analysis. With that is all I have for you guys. I will see you all next time. Hopefully by the time you see this video, we have already broken 10,000 again, but we will have to see. But yeah, I'll see you all next time.